Good morning and happy CPI day. CPI being the Consumer Price Index, which is a key measure of inflation that the Federal Reserve has been watching very closely in their continued attempts to bring inflation numbers back into their target range. Unfortunately, the CPI report came in hotter than expected for September today, basically double what the anticipation was. So the market had kind of expected that the CPI report was going to come in September about 0.2% higher than what it was in August. In fact, it came in 0.4% higher. And when you strip out volatile figures like energy as well as food, it still showed an increase that was larger than what's anticipated. So unfortunately, that gives the Federal Reserve the continued ammunition that they need to be more aggressive in their fight on inflation. As you can imagine, stock market and bond market did not react favorably to this news. Initially, the stock market futures indicated that the Dow was going to open down over 500 points. The last I looked, it was down only 238 points. The S&P 500 and NASDAQ is down as well. Mortgage-backed securities opened the day down over 100 basis points, have since then clawed back. And last I looked, we're down only 68 basis points. Still not a great day by any means, but it could be a whole heck of a lot worse. A lot of times when the markets open, both the stock market and the bond market, on news like this, there'll be kind of an overreaction, and throughout the day, it'll settle down a little bit as the news is digested, which appears to be happening this morning. Hopefully that trend will continue over the course of the day. We'll see what happens. I think at this point, the Federal Reserve, the minutes came out from their last meeting as well, and pretty much most of the Federal Reserve members, were in agreement that they need to continue to be aggressive on their fight on inflation. However, there were a few comments that indicated that, they understand while being aggressive on their fight on inflation, they need to be certain that the impacts don't trickle into a lot of other facets of the economy. So there was some dovish comments there that were made that yesterday actually led the stock market and bond market to improve a little bit throughout the course of the afternoon. We'll see where that goes moving forward. I will update you on the 30-year and 15-year published Freddie Mac rates tomorrow as they come out here within the next couple of hours. I anticipate, especially taking into account today's decline, that may or may not be factored into the published rates for today. But, certainly we're going to see an increase in interest rates, probably an 1/8 to 1/4% if I had to take a guess. A lot of people feel like when the October CPI report comes out, that could be basically a case moving forward for interest rates to actually improve a little bit if those inflation numbers show a deceleration or decline from what they came out looking like this, today, basically for September. So we'll keep you updated. Hope everybody has a great day. Keep your fingers crossed and say a little prayer for some improvement in both the stock market and the bond market. We could use some lower interest rates, in the fixed rate mortgage market. So we'll keep our fingers crossed that happens sometime soon. Y'all have a good day. See you tomorrow.